Senator Ludwig.
Thank you, Acting Deputy President. I rise to speak on the Minerals Resource Rent Tax Repeal and Other Measures Bill. We on this side, Labor, have a fundamental view that Australians deserve to share in the benefits of minerals we all own. The MRRT enables the benefits from mining to be shared across the Australian community while minimising market distortions. It is fundamentally a good policy, good public policy and good economics. The repeal of the associated measures will hit Australians right across the board, especially those who can least afford it, and an attack from all corners of Australian society. That is what this government is proposing to do with this repeal bill. It will remove the school kids bonus, which hits families when they need help most of all, and doesn't help them in their fight against rising costs of living pressures. It hits low-income earners, and women disproportionately will suffer from the removal of the low-income superannuation contribution. Children of ADF veterans who have been killed or injured, including children who have been orphaned, will have their payments cut. Small business will suffer from increased taxes and compliance costs. And over 50s on the New Start allowance who require income support to deal with unexpected living costs will also not get assistance. This legislation and the approach this government has adopted since taking office says a lot about the values of the government which it holds, and confirms that the government wants a retrospective tax grab on millions of Australian low-paid workers to give, mind you, a tax refund to large mining companies. The MRRT and the associated measures aren't short-term thinking and are put in place for now and for future generations. The MRRT is a tax which is noted for its economic orthodoxy. Tax theory is simple on this point. It is desirable to avoid taxes which distort the market and prevent efficient utilisation of resources. The MRRT is non-distorting and encourages the efficient utilisation of Australia's shared resources, especially by smaller mining companies which invest and explore in Australia. Because remember, it is a tax for the big entrenched miners with profits above $75 million who pay this tax. The government, with their refrain, can I suggest boldly that it's hypocritical in regard to their view that they've taken of the MRRT. The government makes two claims. First, they claim the MRRT isn't working because it's making no revenue, and we've heard that. Second, at the same time as saying it's a cost burden and killing the mining sector. Both of these claims can't be correct, and in fact neither are correct. The MRRT will gather $3.3 billion by the government's own estimates, and even more for future generations. Taxing profits, rent profits, means that when mining companies are investing, exploring and taking risks, they don't pay. The MRRT doesn't tax the entrepreneurial spirit of mining companies at all. When profits are lower, for example, when mining is in the construction phase of the boom, or feeling the heat of the high Australian dollar, or fluctuations in commodity prices, of course the MRRT revenue will be lower. That's how the tax works. The mining industry, as we know, has been going through a transition. The investment phase and construction phase are coming to completion. The longer-term extraction phase is beginning. Taxing the inputs to mining won't result in the revenues the government has gathered during the construction phase. The MRRT is an almost textbook example of the best practice for raising government revenue in a way that minimises the distortion to the market and encourages the best utilisation of Australian resources. The MRRT should be uncontroversial. quite frankly. But to this government, sensible economic reform is, quite frankly, an anathema. The repeal of the MRT has taken us to a new chapter in economics. This chapter is about rent seekers and their distortions to sound government. Special interest and rent seekers have come literally out of the woodwork after this election to get their pound of flesh, taken not from the government but from the Australian community. The MRRT wasn't put in place for the short term. It's not for the next 6 months. It was put in place for the next generation. The government is determined to be more short-sighted than Mr Magoo when it comes to tax reform. Even in this government's deeply political maifo, they couldn't hide the fact that the MRRT was raising revenue. The MRRT has little effect on mining investment, and it's forecast to gather $3.3 billion by the government's own numbers. The repeal of the MRRT and associated measures, however, would have and will have, if they are successful, a large damaging impact. Consider who pays this tax. A person with a family doesn't pay this tax. A pensioner doesn't pay this tax. A truck driver doesn't pay this tax. A farmer doesn't pay this tax. So who pays? Who is the government going into bat for? Which deserving group benefits from this repeal? The only group that pays this tax is mining companies with a profit over $75 million when they begin to pay this tax. To say it again, the tax only kicks in on profits above $75 million. And it's worth contrasting that for those that benefit from the repeal of the MRT and their associated spending and those that suffer. The benefits of the MRRT repeal are a small number of miners and only those projects whose profits are above the threshold of $75 million. Fewer than 20 companies in 2012-2013. The ones who suffer from the MRRT repeal are a more diverse bunch: small businesses, parents, school children, people saving for their retirement, those on low incomes, those exploring for geothermal energy, and the children of war veterans. The Australian Institute, their view, they stated, this package as a whole transfers income from something like 10 million Australians, including the poorest. The main beneficiaries are a handful of foreign-owned corporations collectively worth $200 billion. This is the coalition's form of class warfare, quite frankly, taking from small business, retirees, parents and school children to increase the rent extracted from our shared resources by a selected few companies earning profits over $75 million. The fundamental disregard for those negatively affected by the repeal of the MRT is illustrated by the MAIFO itself. This government acknowledges that the reduction in revenue which would result in the repeal of the MRRT of $3.3 billion. But in MAIFO, the government balanced this against $10 million reduction in compliance costs for the big mining costs. But what of the losses to the government? Well, what we have effectively, a circumstance where this government literally and simply wants to rob Peter to pay Gina, a friend of this government. The 20 big miners are going to get a gift of $3.3 billion. What is the ordinary Australian business and taxpayers going to lose? These are the measures that the government is going to remove. Discounting company loss carryback, a very good initiative. Reduction of instant asset write-off thresholds from 5,000 to 1,000. Discontinuing vehicle accelerated depreciation, amending geothermal exploration treatment, rephasing the superannuation guarantee increase, abolishing the low-income super contribution, abolishing the income support bonus, abolishing the school kids bonus, cutting payments to children of ADF veterans. That's what this government is going to do with the repeal of this legislation, and quite frankly it frames this government for what it is. This is the frame which you are supporting from and what you are arguing for. It's the repeal of these measures. This is the underpinning that really highlights how bad a government you really are. The company loss carryback provisions have the rare distinction of being supported by both businesses and unions. The Australian Industry Group said that the company loss carryback provides a very important boost to their companies' cash flow at a time when they need it most and at a time when it is going to be most critical in ensuring survival of the business. And under this repeal, this helpful measure is being wiped away. Prior to the election, the coalition spoke about the cost of living and bringing down prices, almost a chant, could I say. In government, the story changes. A short walk and they're completely backflipped, with a piece of legislation that looks to hit families early next year, right when they need to buy clothing, shoes and textbooks and study supplies for their children. They're going to remove the school kids bonus. This legislation, this bill will rip payments of $410 per primary school student, $820 per high school student from 1.3 million Australian families starting from January next year through the abolition of the school kids bonus. It's telling the government is not debating this measure on its merits because they're not. How could they? There is no merit in this repeal bill whatsoever. How could they justify cutting the school kids bonus, which increases in cost of living pressures at a time when families can least afford it? These measures were fully costed. Why don't you ask your Treasurer? These measures were fully costed. The school kids bonus is a good policy. Sorry, Acting Deputy President, I was encouraged to take that. And cutting it will hit families hard. It really hasn't taken very long for this government to show its true colours. Whether it's cutting school funding under their Gonski backflip or cutting the school kids bonus, the Liberals are not the government that they promised the Australian people they would be. They've come into government on a simple lie, and they don't like it now. And the Australian people are seeing the real coalition government at its best. How to cut services, how to cut from to the bone. The removal of the low-income superannuation contribution is a telling move from a government, despite a promise by the Prime Minister to not implement adverse changes to superannuation. Australian superannuation model is another example of good economic orthodoxy. Helping Australians save for their retirement should be a fundamental goal for government. The MRRT repeal will increase superannuation taxes on 1 in 3 of Australia's lowest paid workers. This is a particularly hard move by this government. It's a party of arguably, it's always said, of lower taxes, but in this instance it wants to do the reverse. So it says one thing to the Australian people, it got into government, it's now singing from a different song sheet. Saving for retirement is essential for individuals in the country. These savings, money invested in super funds, drives investment in infrastructure in Australia. Industry Super Australia estimates, combined with the proposed delay in increasing the superannuation guarantee to 12%, the removal of this measure will reduce national savings by $53 billion by 2021 to 22. This is another hit to Australia's bottom line, to benefit only a very small number of big mining companies. This reduction in national savings means a reduction in available capital for infrastructure investment by around $5 billion based on current industry-wide asset allocations. This is a time when the government is scratching around for funding streams to finance new infrastructure projects. It is there to be used. What are the effects on individuals? The government has sought to both cut the super of millions of Australians earning up to $37,000 while boosting the super for 16,000 people who have over $2 million in super balances. Shame on this government. The bill sees the government scrapping the low-income superannuation contribution, which sees the equivalent of superannuation tax up to $500 paid by low-income earners with an income of up to $37,000 paid into their superannuation account of the taxpayer. This measure was important for a range of reasons. For high-income earners, superannuation has tax advantages. However, for low-income earners, there aren't effective incentives to encourage superannuation contributions. This measure addressed that very issue and stopped low-income earners being at a disadvantage when it comes to savings. The Financial Planning Association was clear on this point. They said repealing this provision will disproportionately affect already disadvantaged members of the Australian society and dissuade low-income earners from engaging with their superannuation. The removal of the low-income superannuation contribution hits women particularly hard, with 2.1 million women affected, and a significant proportion of these are mothers working part-time while looking after young children. This is exactly the part of a woman's career where an additional $500 a year going into super would be of the most benefit for building savings for their future retirement. If the government had consulted, they would have known this measure would affect women particularly hard. If they'd asked the Financial Services Council or the Financial Planning Association or Industry Super Australia or the ACTU or Women in Super, they would have learnt of the effects of the low-income super contribution on women. When all of these groups are against your repeal, perhaps you might want to take a reconsideration. Admit when you're wrong about something. That would be a mark of a good government. But I don't think you'll do that. I don't think you'll be able to admit when you're wrong. Low-income earners entering the 2013 to 14 financial year on the understanding that they would be refunded their super tax. Partway through this financial year, the government has changed the rules for taxpayers. The major concern, of course, in the removal of this is an example of a retrospective tax measure, a fact confirmed by the Parliamentary Budget Office checking of the coalition election costings. But it isn't going to deter this government. This government seems wedded to bad policy. Small business. It's championed itself as the friend of small business, but not here. Not here. The coalition on this bill is saying we don't like small business at all. The government's legislation will increase taxes on up to 2.7 million small businesses and close the loss carryback scheme, taking away tax breaks for up to 110,000 businesses. That's what this government is standing for. But who is going to benefit? A big business lobby group with no small business representation at all is, I think, going to benefit out of this, and it's also running the Commission of Audit. It's no wonder we're seeing a tax hit on millions of small businesses when you see a government engaged in those two processes. On the one hand, big business benefiting out of this repeal, and on the second, big business running the Commission of Audit. It's worth looking back at the deliberative and consultative process that led to the MRRT. The MRRT legislation was based on the Policy Transition Group, which was established back in August 2010 and chaired by a former chairman of the board of BHP, Billiton, Mr Don Argus. All of that has been swept aside while this government crusades on a path of transferring wealth from low-paid small businesses to the big-end mining town. That's where their interests lie. Where their interests don't lie is ensuring fair outcomes for small businesses, for families, which they all promised before the election. It's another thing.
Senator Ludwig, your time has expired. Senator